Bank of Jamaica's third quarterly monetary policy report press conference. We meet and continue to do business under strange circumstances, but the operative term is continue to do business as we must. And so we ask you to bear with us for a slightly different format. A special welcome to those joining us live on our YouTube and Facebook channels, and welcome to the journalists joining us in our regular meeting format. We have with us the Governor of the Bank of Jamaica, Mr. Richard Byles, flanked by Deputy Governors Robinson. As usual, the Governor will address you and he will speak to the bank's latest monetary policy decision in the context of the bank's outlook for inflation and the overall economy, against the background of the economy's performance in the January to March 2020 quarter, and of course, all within the context of the unusual perspective of the ongoing COVID-19 crisis. We ask you to pay close attention, and we'll accept questions from the journalists afterwards in our usual manner. Thank you very much, and please welcome Governor Richard Byles.
Thank you, Tony. Good morning, ladies and gentlemen, and may I add my welcome to you to the quarterly monetary policy report press conference. As Tony indicated, we have here to give me support Senior Deputy Governor John Robinson and Deputy Governor Wayne Robinson. You may want to note that today is John's last press conference to do with the quarterly briefings. As you will recall, he retires at the end of September. And I wanted to just say what an asset he has been to the bank over these many, many years, and to me in particular, in the last year since I have been the governor. The depth of John's knowledge about monetary economics and his experience at the Bank of Jamaica is absolutely invaluable. He will be succeeded, as I think you know, by Dr. Wayne Robinson, and I am very, very confident that Wayne will play the role of Senior Deputy Governor in an excellent manner, and I look forward to working with Wayne. I'm sure you'll have at the end of this conference some questions for John as to what he intends to do, so we look forward to those discussions. Jamaica and the world continue to grapple with the challenge of the COVID-19 pandemic, particularly the resurgence of infections and the impact on the economic activity. Against this background, last Tuesday, we announced our decision to hold the policy rate at 0.5% per annum. The decision to hold the policy rate unchanged is based on our continued assessment that the current monetary policy stance is generally appropriate to support inflation remaining within the bank's target of 4 to 6% over the next 2 years. The current inflation rate for the 12 months leading up to July 2020, as measured by the Statistical Institute of Jamaica, is 5.7%. This outturn is This outturn in headline inflation reflects the impact of higher food prices, mainly agricultural commodities. Price increases that exclude the influence of agricultural food and fuel prices, what we call core or underlying inflation, have been trended upwards in recent months to 4.2% for the year to July. And it is consistent with the bank's accommodative monetary policy stance. Moreover, the outturn for July reflects increased prices for health services, personal care goods, and some processed food items, consequent on higher demand for these goods and services. Looking ahead, quarter by quarter, Bank of Jamaica expects that the headline consumer price inflation will trend as follows. To September of this year, between 5 to 6%. To December of this year, about 4 to 5%. And by March of next year, again to 5 to 6%. This near-term inflation forecast is largely being influenced by, one, a deceleration in agriculture and processed food prices, and secondly, higher imported inflation. The outlook for higher imported inflation is largely as a result of our projection for higher oil prices, which should contribute to increased domestic energy and transport-related prices. The projection of a slowdown in the pace of increase in food prices is mainly related to the expected normalization in supply conditions following the early onset of drought conditions at the start of the year. In addition to these factors, there could be some adjustment in regulated prices, which could affect inflation in the near term. Over the next 2 years, inflation is projected to remain in the 4 to 6% band. Looking at the risk to the forecast, the risks to the inflation forecast over the near term are mainly skewed towards a higher outturn. A major factor that could cause inflation rate to be higher than expected is a worsening of the impact of unfavorable weather conditions on agricultural prices. Fuel and energy-related costs could also have a stronger than anticipated second-round effect on prices of processed foods and consumer durables over the near term. In addition, improvements in domestic demand could influence higher than anticipated prices, particularly for agricultural foods. The main factors that could cause inflation to be lower than our forecast is that domestic demand and imported inflation could be lower if global growth is weaker as a result of the prolonged pandemic. The impact of COVID-19 on the Jamaican economy has been significant, and we have updated our view on its effect on the domestic economy. Our current projection is for the contraction in financial year 2020-21 to be greater than previously anticipated, more in a range of 7 to 10%. This is above our earlier forecast for a contraction in a range of 4 to 7%. This worsened outlook is largely associated with the resurgence of the virus in major trading partner countries, as well as updated assessments of the impact of the crisis on some sectors of the Jamaican economy. Between June of this year and March of next year, we expect weaker performances within the transport, storage, and communication sector, the electricity and water sector, construction, and hotels and restaurant sectors. The revised outlook for transport primarily relates to lower than anticipated demand for public transportation, given lockdown measures and work from home arrangements. For electricity and water, the revision is associated with a reduction in demand arising from the general decline in business activity, while the decline in hotel and restaurants is consistent with a more pessimistic outlook for U.S. GDP growth. The bank is expecting that partial economic recovery will commence in 2021 to 22, with GDP growth anticipated in a range of 3 to 6%. Notwithstanding the expectations for growth, the Jamaican economy is not expected to return to pre-COVID-19 levels before 22 to 23. The economic impact of COVID-19 has also adversely affected loan demand. More so, consumer and personal lending non-credit to businesses. Growth in business loans remain relatively strong at 16.9% at June 2020, slightly below the growth rate of 18.2% recorded in February of this year. But for personal loans, we observed a more significant drop-off in growth to 10.7% at June compared to 15.3% at February. This buoyancy in growth in business lending has been largely driven by increased demand for working capital, as well as loans that have already been in the pipeline. Meanwhile, the decline in personal loans has arisen because the outcomes of households have been hit by the downturn in economic activity. As expected, there has been a slight worsening of non-performance loans since the onset of the pandemic. However, the financial system remains well capitalized with adequate liquidity to facilitate the continued smooth running of the sector. There has been much public concern about the movement of the exchange rate, particularly since the 12th of this month, when it crossed a psychological threshold of $150 to $1. The public concern and anxiety are understandable. The reason for the weaker Jamaica dollar, ladies and gentlemen, is the significant reduction in the availability of US dollar inflows into the system, due primarily to the sudden stop in tourist arrivals since the onset of COVID-19 in Jamaica at the end of March this year, and the slow recovery in the sector since the reopening of our borders in mid-June. We note that remittance inflows have been particularly strong, growing by approximately 42%, and this has certainly helped liquidity in the market. However, there was a pickup in foreign exchange demand in August when compared to the previous month, and this has led to an adjustment in the exchange rate. Bank of Jamaica sold US $30 million to the market on the 18th of August, so as to ensure continued orderly adjustments in the exchange rate. We also offered a US dollar index bond to investors seeking a hedge against future exchange rate movements. This comes on the heels of several prior initiatives to provide extra liquidity to the foreign exchange market since March of this year, including BFIXIT flash sales, direct sales to players in the energy sector, extending a foreign exchange swap arrangement, providing a US dollar repurchase facility, and reducing the foreign currency cash reserves held by DTIs. These measures have already provided in excess of US $700 million in foreign currency liquidity support to the market. Apart from supplying extra liquidity in times of crisis, as we have done, Bank of Jamaica intervenes only if we see or expect disorderly movements in the exchange rate that could threaten the inflation target. Bank of Jamaica continues to monitor developments in the foreign exchange market, and we will work closely with authorized dealers and cambios to ensure the smooth and orderly functioning of the market. If necessary, BOJ will act using both monetary policy and foreign exchange operations to ensure that movements in the exchange rate do not affect our inflation target. Let me emphasize, ladies and gentlemen, with gross reserves of $3.7 billion US dollars, Jamaica is in a stronger position than in previous crises. These reserves, if judiciously managed, will be adequate to see us through this temporary crisis. Ladies and gentlemen, the prospects of the Jamaica economy continue to be characterized by heightened uncertainty associated with the COVID-19 pandemic. As the number of reported cases rise both here and abroad, sustainable economic recovery could be delayed, awaiting recovery of the critical tourism sector. In light of these circumstances, Bank of Jamaica has maintained its accommodative monetary policy stance, aimed at encouraging and supporting a speedy economic recovery once this crisis has passed. We will remain focused on ensuring that inflation remains low, stable, and predictable within the target range of 4 to 6%, while standing ready to deploy additional measures as needed to ensure the continued smooth flow of liquidity to all participants in the financial system. Thank you.
Thank you very much, Governor. Ladies and gentlemen, I forgot to mention earlier that in addition to the gentlemen you see, we are also joined remotely by Deputy Governors Haynes and Sims, and so they'll be able to help out with questions if needed. And now we'll take
Morning, Durand. Yes, that's what we're referring to. The administrative charge that the utilities are allowed through the OUR to make. There are a number of applications pending. We don't know when they will be dealt with and what the result will be. So that's what we're referring to. I'm going to ask Dr. Robinson to address that, but my short answer is no, no disaster.
Morning, ladies and gentlemen. Yes, I can only echo what the governor says. It doesn't spell disaster, but it just underscores the challenge that we face in this new environment. We have to now refocus and redouble our efforts to ensure that we can recover strongly.
due to the COVID-19 with regard
Okay, sorry about that, ladies and gentlemen. We seem to have been having some technical issues. Andrew, can you continue, please, and start again?
Yeah, Tony, you hear me?
Yes, hearing you now.
All right. So essentially, my question is, I just wanted to find out how much progress has already been wiped out, re Jamaica's balance of payments and due to COVID-19.
Did you say how much progress? Was that the word?
Right.
Okay.
Governor? Yes. Okay, thanks for that question. Prior to COVID, we were recording very low credit. Underscore, though, that we came into this crisis in a strong position. We had very strong buffers in terms of our reserves. We had very strong fiscal positions. And also we continue to operate a floating exchange rate, which will then, a combination of these factors will allow us to manage this shock and manage through this crisis.
I have about two more questions.
Okay, go ahead, Duran.
Okay, Governor, I see where a lot of financial institutions are making provisions for credit loss. I know that these provision doesn't represent actual loss, but it does indicate to some extent the credit quality out there. Could you share with us your assessment of the general credit quality now in the bank? I know that these provisions doesn't represent actual loss, but it is an indication of the credit quality that is out there. So my question is for the governor, general assessment of the credit quality within the financial sector.
I don't think that our credit quality is particularly bad. I think you'll find that the world throughout, financial institutions are making provisions. Let me take a minute to explain how the accounting process works. If going into the pandemic, you had a loan that was performing, you are allowed, if in the pandemic they find that they have to close business, you are allowed to give them a holiday. If they weren't performing before the pandemic started, you have to make a provision for them. I don't think the businesses that going into the pandemic were in good shape. I don't think you can make an assessment of them right now until the pandemic starts to ease up and businesses reopen. For example, many of the tourism-related businesses in Jamaica. So the banks are just being prudent by saying, well, we expect that there will be some, so to speak, casualties. Let us provide for it now. And that's just good business and financial prudence. But I don't think it indicates that the quality of our credit is any worse than quality elsewhere. John, I don't know whether you want to add anything to that.
And what was the total last year?
Well, I don't have the exact figures except to say that at June, they were 42% above what they were same time last year. A tremendous increase. We at Bank of Jamaica have been trying to understand what's driving this increase. What we do know are two things. One is that when things get hard in Jamaica, in other words, our family and our friends lend extra hand to help us here in Jamaica. But also, I think a lot of Jamaicans normally travel to Jamaica in the summer period and coming to Jamaica, bring with them his gifts or some funds. They can't travel as much as before. And so maybe we're seeing your contributions to the remittance system. I think that's a credible explanation for this massive increase of 40% remittances. I must say, it's very well appreciated in this circumstance.
In the latest quality of credit report, quality of credit condition survey report that you guys published, we see that the price of credit for within businesses has been
the experience has been divergent significantly. So, for example, large companies, they have had a much better overall experience. The price of credit for large corporations fell from 7.63% on average to 7.3%, whereas the price for small businesses rose from 9.78% to 11.48%. And then the same experience for micro businesses. So I guess, and this was from March 2020. So I'm expecting that June is going to be, a lot worse. So I guess the question is, to what extent is there any amount of interventions by the bank that can help, either soften the risk for financial institutions so that they can extend credit to more cheaply to to MSMEs and to SMEs, given that, based on the survey report, they are clearly being hit the hardest and will likely continue to feel the brunt of disorderly market conditions in the credit market.
All right, thanks for that question. Well, Bank of Jamaica for quite some time now has been maintaining an easy monetary policy stance. So we have kept our interest rates very low, and we have also ensured that there is adequate liquidity within the system so that banks can lend. What you're actually seeing, though, is that each institution, each financial institution, have to make an assessment as to the type of risk that a particular credit project presents. And therefore, the disparity or the divergence in the rates that you're seeing coming out of this survey is just reflecting that. And as conditions improve over time and risk appetite and risk perceptions improve, you will see some changes. But typically for your small micro entities, they tend to carry a little bit higher risk than the good credit, and that's what you're seeing. This is just a part of the normal dynamics in a credit market.
Some technical difficulties. So to the extent that you're not hearing some of the responses clearly, I'm going to ask you to email your questions in and we'll try to respond to you before the day is up or by tomorrow morning. But let's try to continue to the extent that we can hear each other.
Yeah, I just want to supplement the response we gave about the remittances and how they're performing this year. In June this year, for example, remittance inflows were about 220 million US. Last year at the same time, they were about 170. They have really picked up since May from the kind of average of 160, 170 million per month during 2019. They had fallen off right after COVID, but we have seen extraordinary increases since May. And that is the 42% that we referred to in terms of June over June last year.
Mark, are you there? Can you try asking your question again, the one you didn't hear the response to clearly? Let's see if we're in a better now.
My question was about the credit conditions generally, but what I haven't heard probably about the last 3 or 4 responses. So it's not just to my question, and I think some of the other guys are having the same issue. But my question was specifically about credit conditions for MSMEs and SMEs, because according to the last report that you guys put out about the credit survey, SMEs and MSMEs, the price of credit has increased significantly for both categories, whereas for large businesses, it has decreased. So generally speaking, I understand that SMEs and MSMEs are a lot more risky. So I can understand and I appreciate why the cost of credit would be more expensive to them generally. But are there any, given we're in the middle of a crisis, are there any extraordinary measures that the bank can pursue to reduce the risk for FIs so that they can I guess provide greater assistance to small businesses and MSMEs to blunt the sharp increase in the cost of credit that they are currently experiencing?
The key problem or the key issue is the difference in risk. Right. I was saying you've hit the nail on the head. The major challenge is the risk appetite and the assessment of risk of the various entities, particularly smaller entities. Bank of Jamaica generally have our approach, and what we can do is to ensure that conditions are favorable for banks to continue to lend. And in this regard, we have maintained a very easy monetary policy, which encourages generally low interest rates. And even though you may see the rates for small and micro enterprises going up, generally over time, if you look over the past year or so, generally the trend is still down. So we've tried to maintain an environment where there's adequate liquidity and there's a low inflation environment. What I would point out, though, is that there are other agencies, such as the Development Bank of Jamaica, that provides facilities such as the Credit Enhancement Facility that is for small and medium-sized enterprises that will allow them to access credit at much cheaper rates.
Thank you, DG Wayne. Any other questions, ladies and gentlemen?
Yes, Tony. I didn't hear the response to my question, so if I could ask it again and get a response. You heard me?
Seems to be gone again.
Hello?
Yes, go ahead. You're on?
I'm not hearing.
All right, ladies and gentlemen, we seem to be having some technical issues, so apologies. I'm going to ask all the journalists logged in to email in whatever questions you had that weren't answered or that you couldn't hear properly, and we'll try to respond to you as soon as we can. Thank you very much for joining. Thanks for your patience and trying with us, but 2020 is 2020 and these things happen. Our apologies once again. Have yourselves a good rest of day, rest of week, and please, above all, stay safe. Thank you very much.